me ask for your assessment here of the U.S. economy. We heard from Bill Dudley. What's yours?
Well, my assessment is that the economy is slowing. We see no inflation. We see poor retail sales. The labor market certainly appears to be slowing. China looks to be, well, not yet in free fall, but is worrying. But I think the interesting thing that Dudley actually said was that he talked about whether he wanted to raise rates based upon what he thought was going to happen. But he said something quite telling. He said, it's a forecast, it's not a commitment, and the markets don't think that rates are going to rise. I think there's something like a 10% probability in October and a 30% in December. And I think it most unlikely the Fed is going to pull a surprise. So consistent with what I've said all through this year, I don't think they're going to raise rates this year. And who knows when next year, although the Fed does become a bit more bullish as the membership changes in January.
And I just want to have everyone look at my terminal here for a moment using the WIRP function here, gauging the likelihood of one of those rate increases happening in December. Now 32%, looking ahead 39, and then 53 in March. So they're just a take on what economists are thinking about that rate hike. This was a fascinating event, Danny. It was Bill Dudley with John Taylor, of course, father of the Taylor rule. And we had Bill Dudley sort of rejecting the Taylor rule out of hand.
Yeah, I think that's right. But I think the story also reports that John Taylor himself said the rule was never meant to be followed mechanically. And when you look at the rule, it really depends what you put into it. I think the evidence we have right now is probably that flexibility is better than following tight rules. I have a paper which actually still suggests that perhaps if you put the right things into the Taylor rule, interest rates should still be strongly negative and suggest that actually you should be doing stimulus. So even if you were to follow the rule, members of the Fed would be fighting about what goes into the rule, which measures there are of certain things. So it doesn't really help you that much. But I think it was interesting intervention by my old friend John to say his view was that the Taylor rule shouldn't be followed mechanically. And Bill Dudley says his view is that you shouldn't be following it. Mine too.
Your old friend John, I love it. Let me ask you again about sort of the changing probabilities here of the rate increase. I wonder if you think that's attributable to the data purely, or is it the fact that we're hearing so much from so many of these Fed presidents? I'm just looking at the agenda for today. We had Bill Dudley, James Bullard speaking as well, and Loretta Mester from Cleveland speaking today. It's just been a packed schedule of speeches, again, ahead of the blackout period, but a lot of people giving their thoughts on what they think the likelihood of a rate increase this year will be.
Well, they're certainly giving their views. The problem is that central bankers are not astrologers. They've made forecasts. But Bill Dudley the other day said there was a gap between what Fed officials were predicting and what the markets were thinking. And he was asked, well, why is that? And he said, because we've been so bad at forecasting things. We've been too overly optimistic. So what we're seeing is Fed officials saying they hope to be able to normalize. But let's get real, there is no formal plan. They don't exactly know how to extricate themselves from the zero lower bound. And when they say that they're following the data, they really are. And the problem is that the data's weak, and my view is certainly between now and December, and probably between now and January, there's going to be no chance for the data to resolve this problem. So you revert to better not to do anything than to raise rates, make a mistake, and as Dudley said today, the danger then is you have to cut back to negative, as some places have already done. So be careful, sit where you are, and I see no chance now really of a rate rise in 15.
All right.